Ladies and gentlemen, my fellow Rezolvians, welcome back to the channel. Rezolve AI Stock up about 6% right now. Baby, we have some breaking news to go over. We do have Dan Wagner that went on the NASDAQ, kind of like a stock news show, to go over agentic commerce with the holiday season and what's going on there. We'll talk about that. I'll show you the highlights of what Dan Wagner said. The clip's 15 minutes long, so don't worry. We're not going to play it all, just the highlights of what you need to know. Now, Dan Wagner and Rezolve are also doing a conference with RBC Capital Markets, and that could spark some news. So we're going to be on the lookout for that. We're also going to look at what the short sellers are doing in their short positions. As I've shown you in the last, couple of days, short sellers have reduced their short positions in Rezolve by about 50%. So they've really covered on a lot of their short position in the past week or two. And that's a really good sign that they are expecting further upside. Last but not least, well, second to last, we're going to talk about this market throughout the rest of this week. Do I think this upside is going to continue? And last but not least, I will show you my position in Rezolve because people are wondering, hey, did I sell? What did I do? And the answer is no. So I will share that with you as well. Do me a quick favor, hit that like button as well as subscribe to the channel if you have not done so already, and let's get started. So first and foremost, I want to explain what's happening in the markets today as briefly as possible. We got better than expected initial jobless claims data that was backdated a month ago for October 18th. Came in 235,000. We were expecting around 255,000. So signs that the economy, labor market maybe is not as bad as feared, okay? Now, you're going to get TJX earnings. You're going to get Lowe's earnings. You're going to get Target earnings tomorrow morning. That's going to give you a better insight to the holiday shopping season, how consumers are doing, and again, another indication of how the economy is doing. Wall Street has been selling a stock like Rezolve that's unprofitable, hyper growth, right? Because of recession concerns. Because if you go into a recession, stock prices are going to collapse. It's going to be very hard to issue new stock to raise capital. It's going to be, the bond market compresses. It becomes very difficult to issue new bond issuances, okay? Raising capital becomes very difficult, okay? AKA your odds of going bankrupt goes up quite a bit, okay? So, Rezolve, other small caps, they've been sold off to oblivion, okay? And while I think there's still a lot of work to do to the upside to get Rezolve to the place that we believe the company will be, I think that's starting, okay? Now, Thursday, I should say, we have NVIDIA earnings on Wednesday. There's been fears of an AI bubble and blah, blah, blah. Jensen Huang told us 5 weeks ago, demand for their products has grown exponentially in the last 6 months of 2025. He's going to tell you the same thing on Wednesday. So AI bubble fears are going to, I believe, start to die down and slow down a lot by the end of this week. Okay. And then Thursday, you have initial jobless claims. Again, another round. You have the jobs report for September. You have Walmart earnings in the morning. So I believe Wall Street is going to really dial back their expectations for a recession, but also getting the clarity on the economy that the economy needs rate cuts also boost the odds of getting a rate cut in December. You can see the odds of a rate cut today are now 42.8%. Yesterday, they were about 35%. So the odds are actually going up today that we do get that rate cut in December, which is helping to fuel this, smaller cap resurgence today. So that in a nutshell is what is going on. I believe by Friday, we're going to have a broad consensus understanding. We're not in a recession. The labor market is holding in there. We're likely going to get a rate cut in December, and AI is not in a bubble. That is a perfect recipe for some of these severely oversold, beaten down stocks like Rezolve to go up quite a bit in the weeks to come. Rezolve, still has an RSI of 29. Like you're still due for a pretty aggressive upside rally. On a technical basis, you want to get above that $3.07 level. If you can get above that, things get really exciting again to the upside. Then you start to target that $4 plus level. Keep in mind, Rezolve is about an $850 million market cap as of now, so it's trading at less than 2 times sales. Now, that doesn't matter if you go into a recession, but if Wall Street starts to put recession odds at a lower probability, that price to sales multiple has a lot of room to move to the upside. We've kind of grown lately into a market where Wall Street only cares about profitable stocks, and they don't even really care about those on some days. Like 2022, anything that was unprofitable, it did not matter how fast you were growing. None of that other shit mattered. If you were unprofitable, you were untouchable. Okay? And that's kind of the market we've slowly been finding ourselves going back into. But again, that's all based on recession fears. And I think by Friday, recession fears are going to die down quite a bit. Now, let's get into what the short sellers are doing today in Rezolve. As we talked about over the past couple of days, short sellers have dramatically reduced their short positions in Rezolve. Rezolve's short interest of free float sits at 4.37%. Recently, it was as high as 11% in mid to late October, about a month ago. So they've reduced short positions 60-70% in the last month, which is a good sign that they don't find value in shorting Rezolve at $3 a share, which is a good sign of likely upside to come. Today, you have 1.5 million shares that are being covered on as well, or estimated to be covered on. So yeah, it seems like they all have the same idea. Like Rezolve to have a 4.37% short interest is crazy. If you look at, other stocks, other AI stocks, BBAI, you're looking at, like 20% short interest is pretty standard for a lot of these hyper growth AI stocks. Rezolve at 4.3% is really a standout. Now, you do have one trade today from an institution or hedge fund. It is a February 19, 2026 $5 call. They paid 30 cents per contract, so that's a break even of $5.30 by February 2026. That would be almost a double from here. That'd be like 80% upside. So, that's a pretty bullish trade, and I would take that versus where we are any day of the week. So a bullish trade, did want to share that with you. It doesn't mean for certain that that's where we will be by February, but it's a pretty good sign. Someone out there is also bullish on the stock. Now, keep in mind what I said a couple of days ago. Dan Wagner reiterated that Rezolve will provide a full year update for 2025 ARR in December. So over the next couple of weeks, one day we're going to wake up to a tweet that Rezolve hit XYZ ARR for this year. Now, the guidance was 150 million. You really want to see like 180 to 200 million because the guidance right now for 2026 is 500 million. So you want to see that growth starting to accelerate, okay, or have started to accelerate. And I believe that is what we are going to see. And then again, when Rezolve is trading at this kind of a low valuation, there's some pretty significant upside on news events. And I think it's the news headlines that are going to drive this stock the most. Like if we get the right piece of news, Rezolve could go up 30-40% in a single day, right? Just because of how much it's been sold off and where the valuation is currently at. Now, Dan Wagner will be speaking at the RBC Capital Conference this afternoon at 2:40 p.m. And it wouldn't surprise me if you do see analysts raise price targets after a conference like this. Okay, last time you had a conference with H.C. Wainwright, which has currently a $9 price target on Rezolve, they came out, I believe they had a $7 price target before, and after that conference, they raised it to a $9 price target. Okay, you can see here, on June 13th. H.C. Wainwright had a $4 price target. And then on September 15th, after the conference, they raised that to a $9 price target. Okay, so would not surprise me at all. Now, Dan Wagner with Rezolve AI went on NASDAQ and Trade Talks to discuss the age of agentic commerce and how large language model driven shopping is going to shape the upcoming Black Friday Cyber Monday season. So I'm going to clip this. We're not going to listen to the whole 15-minute thing here, but I do want to share the parts where Dan Wagner is speaking. So take a listen.
Market site, we have Daniel Wagner, founder, chairman, and CEO of Rezolve AI, and Justin Grooms, president of Bolt. We're here to discuss the age of agentic commerce and how LLM-driven shopping is going to shape the upcoming Black Friday Cyber Monday season. It's great to have the both of you with us. Welcome to Trade Talks. And Daniel, let's identify this. What is the age of agentic commerce?
So the future of digital channels is going to be sort of split roughly 50-50 between turning up at a website as we know today, and instead of navigating using sort of the clicking and the navigating around the way that we do at the moment, having a conversation with a digital agent that is very sophisticated in its conversational skills and will give you all the information you need in order to make a purchase. That's the first route to engaging. But the second route is that I'm having a conversation with Siri, or I'm having a conversation with Google Assistant, or with ChatGPT, or with one of these other AI agents, and they will send off a programmatic agent to the Hilton website, or to the Macy's website, or to whatever, to interrogate on my behalf via ChatGPT the things I want to get answers to. So, for example, today, if I was to say, to ChatGPT, I'm looking to book a holiday in France, can you suggest any hotels? It eventually would send me a link to the hotel, and I'd go off from ChatGPT to that hotel. But the future will be that an agent will go off from ChatGPT, interrogate the hotel's website on my behalf, and say, hey, these are the available rooms at this hotel and that hotel, and I will complete my transaction talking to ChatGPT, for example. Mm-hmm. So those are the two ways. And agentic commerce means that ability for that site to engage with an agent rather than with an individual. So I go back to that retailer and say, hey, this isn't the item that I wanted. And the retailer goes, oh, well, an agent came in from OpenAI or ChatGPT or from somewhere else. There's a real complex challenge there that is going to overwhelm many retailers down the road. And what we do at Rezolve AI is try to solve that problem, or we solve that problem rather, by providing an agentic interface that is Gen AI supported. Think of it like a bouncer in front of the warehouse who protects the retailer from rogue agents coming in and making the wrong decisions on behalf of consumers. I mean, the retailer still needs to protect its interests, even if it's not dealing, even if via a third party it's dealing with the customer rather than directly, and it needs to protect that through solutions like ours.
Yeah, I mean, if this is going to be a $100 trillion economy, it has to be done right.
Absolutely.
Yeah.
Absolutely.
And Justin, we've still
cash out of an ATM using cryptocurrency, but getting real from the ATM, or paying the merchant in real. So we're a real advocate of the change in infrastructure to the blockchain as a long-term trend. And you're right. I mean, the whole of the blockchains are based on agentic interactions. So we're moving to this new world, and I think that just like with the dot-com boom back 25 years ago, there's a lot of fear, doubt, uncertainty, and lack of knowledge as to how to navigate through that to the best outcome. And I think that we're both sitting here as advocates for how to navigate and provide solutions for it.
Yeah, I mean, the cat's out of the bag.
Been out there.
Store is the expectation when you're dealing with a fantastic salesperson or representative in a physical store, is the expectation that we have that consumers will want when dealing with digital channels. Because when you're talking to somebody in a physical store and they're knowledgeable about the products and they're knowledgeable and they're sensitive to you and your requirements, then you end up buying. And when you go online, there is none of that interaction today. So we're changing that into an interaction, substantially similar, if not in many cases better than the interaction you have in store.
So in today's model, or what's going to be an extinct model at some point, where search is pay for play, right?
Yeah.
Or agentic model, or agentic agents going to fall under that model as well?
No, I don't think so. I think that
Which is why I think a lot of people do go to generative AI to do search. So it's
Yes.
not just the same, results coming up.
Yeah, look, I think the real issue is, which I pointed out before, is that if you start with an engagement with an existing interface like ChatGPT, and the retailer doesn't open up their website to accept agentic interaction, then they're not going to get the order, right? They're just not going to get the order. If they open it up without any controls to it, any structure around what's behind it, they're basically letting people into their warehouse to rummage things off the shelves. So there is pitfalls to this, but if the retailer controls the interaction with the agents in the same way that it controls interaction with consumers, then it can survive in this new world and actually thrive.
Yeah. Justin, how do you see
Relationships between buying something and what might be appropriate to go with it. It's also very helpful to answer questions that would otherwise be difficult to do online. But the real issue is these hallucinations, because this is, you need this kind of oversight to understand that these LLMs aren't reliable enough. Obviously, we've solved it in Rezolve for the solutions that we provide the merchant, but in the generic LLMs, it's rife and it's a big problem. And sometimes you could end up being confused by the answers that you're getting because you don't identify them as being wrong at the outset.
How about the regulatory landscape in the U.S. and having that alignment to continue advancing these technologies and payment rails?
There doesn't seem to be any restriction there from our perspective. I mean, it's quite an open economy for that.
Yeah. I mean, when you're talking about stablecoins and using cryptocurrencies as forms of payment.
Well, I mean, the Genius Act didn't go far enough, in my view, to address the point of using cryptocurrencies in everyday transactions. It didn't address the issues around potential tax and so on, and it was more about the banking infrastructures. And I think it needs to be, extended and enhanced, but it's a great step forward. I mean, prior to that, there was nothing really. There was nothing there at all.
Yeah. So, and Justin, you and I have covered.
To transact on a daily basis is not that straightforward, or it isn't at the moment.
So it sounds like we're trying to connect the dots and build those bridges and integrate it so that the users, so it becomes ubiquitous and a utility in some way.
Correct. Well, the blockchain is a very different infrastructure to the world we live in today in terms of the way in which the infrastructure for payments works, for example. And these bridges between these two need to be more robust, and they need to be more usable.
When do you think it might become more?
Well, we're doing it. We did $1 billion of transactions, through our wallet, but that's a tiny fraction of the total volume of activity in the world today in retail. So, it's starting, but, there's some way to go.
Yeah, certainly is. All right. Appreciate your insights. As always, thanks for joining.
That was great. I love to see, Dan Wagner out there, doing his thing, talking about Rezolve, especially on places like this where investors are watching, okay? So that's great. And we'll see what kind of headlines come out from the news from the conference at 2:30 today. Now, here's one of my positions in Rezolve. $2.99 is my average cost, 14,250 shares. Up today, $2,200. Current market value, $41,400. Total return, down 3%. So I am now negative on my Rezolve position. In this portfolio, have 11,305 shares. Current value, $32,841. And unrealized return down about 13%. It's interesting. It seems like public forced sold a couple thousand shares. I don't even have that much margin out there, though. I don't know if some of their risk models kicked in. I don't know what happened there. If I had an issue, maybe an open order that I typed in wrong or something. I noticed it as I was starting to make this video, so I'm not exactly sure what happened with that, but we still have plenty of shares. I'm honestly not even like too terribly mad about it. Oops. Hello. There we go. 5 plus 14,250 plus 1,000 in the Webull, 1,000 shares in the Webull plus 1,300 shares in the Thinkorswim. That's leaving you at about 27,855 shares total times $2.91. We still have $81,000 worth of exposure in Rezolve at this point. So we are heavily exposed to Rezolve. And again, I think the best days are ahead of the company. it's not going to take a lot at this point. It's not going to take a lot of good news. We know we're going to get that ARR target update in December, and I think we're going to get maybe some contract news pretty quickly. The stock is oversold. I think the odds of a recession, the fears of a recession, are going to continue to fall as well. And again, overall, I do think better days are ahead. And when, again, a stock like this, such a high quality company, in my opinion, projecting to grow at hundreds of percents next year, is trading at less than 2 times sales, it's a clear buying opportunity in my personal opinion. And I like the stock when I bought it in the low $2 range. I like the stock in the $8 range when I held it. I like the stock in the $4 to $3 range when I started to, buy the dip. And I like the stock today. Nothing has changed with the business itself, for better or for worse. All they've done is hire some former senior executives from Microsoft, Google, Apple, Accenture, right? Tata Digital, that's it. I would call that a positive, getting high-ranking, former executives from other companies with Rezolve. But other than that, there has not really been any good or bad news. It's all been just sentiment and what's been happening with the broader markets. And I think that is about to change in a big way. People are going to have to reverse course on some of their recession calls and some of their short positions on this market, in my personal opinion. So let me know your thoughts on all of this down below in the comment section. Hit the like button, as well as subscribe to the channel if you have not done so already. If you guys want to come trade, invest with us, check that link out down below in the description of today's episode as well. With that said, have a great rest of your day, and I will see you in the next one.